Now we go to preparation of student affairs method. These are it relates to that of opening, that of non-profit making organization. You know, I told you the other time that the statement of affairs, as we've done that in non-profit, it still applies to that of a single entry and incomplete records. So how do you prepare the statement of affairs method? The first thing is that the first step you prepare is you prepare the opening statement of affairs. You know, in that of the illustration we did earlier on, we have the closing balance sheet and the opening balance sheet. So the opening balance sheet, which is the opening statement of affairs, is what you prepare first. Then after that, the step 2, you prepare the closing statement of the closing statement of affairs, which is the closing balance sheet. In the question, you'll be given that like with the illustration we did earlier on, we have a 31st and we have a 31st. So you prepare the closing. After you prepare the closing, then you prepare the statement of profit. So with the help of information you get from the owner of the business that is recording this transaction, you'll be able to get the statement of your profit, and at the end of the day you prepare the balance sheet at the end of the day. So these are the steps in preparing the statement of affairs. And another thing, do you know that you can get your profit? We cite some examples here. When the time arrives, when the need arrives, then do you know that you can get your profit from 2 balance sheets, which is the opening and closing statement? Do you know that you can get your profit there without giving you net profit? Yes, it happens, because you see that in the first opening statement of affairs and the closing statement of affairs, the trading activities have been involved. So you can't have the same statement you have in opening will not be the same statement you have in closing, because there is no way you will engage in activities for good 1 year that your assets will not change, your creditors will not change, your capital will not change, and then do that. So you can use that also to arrive at your statement of profit, which is the net profit at the end of the day. So before we go to the question per se, let's look at the format of a statement of profit that I told you the other time. So take this a statement of profit. How, even if you are not given net profit, you are not given expenses, you are not given gross profit, and you are not given any information that are pursuant to that, you can get it from first your closing capital. When you have your closing capital, then you add drawings. After you add your drawings, then you will less your opening capital. After you less your closing capital, then you add your additional capital. If there is any additional capital, at the end of the day you get your net profit or loss at the end of the day. When we get to the question, we will do an illustration that relates to the format of a statement of profit. Now let's go to the illustration. Illustration 1. Mr. Okoro did not keep his account on double entry basis. That means his account is incomplete. Now, as a bookkeeper, as an accountant, you are required to prepare the statement of profit from the following information. This is the information that you received from Mr. Okoro. This is the opening balance sheet, and this is the closing. And you know, I told you the other time that opening balance sheet is the closing balance sheet of last year. Let's say this year, balance sheet of this year is the closing balance sheet of last year. So that is how it is represented here in the December 1997. So we have information, we are given information, then that of the closing balance sheet, that of that year, that it is December 1998. We have, these are the information that relates to it. Then we now have additional information that during the year he estimated the total drawing in cash as 2580 and part of the stock costing 1, 2, 20 were for domestic purpose. Then the following information was agreed upon. Now, 1, to write off bad debt, to allow 15% depreciation of furniture and fittings and 20% on motor van. Now, you are required to ascertain the profit and loss for the year ended 31st December and balance sheet as at that date. If you look at this question, you will discover that we are not given purchases, we are not given sales, you are not given any expenses at all, and they want you to ascertain the profit and loss. How do you go about it? The steps I gave you the other time, that is what the steps I gave you the other time, and these are the steps: prepare opening statement of affairs, prepare closing statement of affairs, preparation of statement of profit, and at the end of the day, we prepare balance sheet. So the first step we prepare in this question is you prepare opening statement of affairs. Let's go to the question. Let's go to the workings and see how we go about it. So the question said we should prepare a statement. You are required to ascertain profit and loss account and the balance sheet at the end of the day. So don't forget the steps that we need to strictly follow when we are preparing profit and loss under incomplete record. So we're given the first thing is we prepare statement of affairs as at 31st December 1997. So we want to get the capital, because the step 1 said you must prepare statement of affairs, and we have a closing balance sheet which is December 1997 and December 1998 which is the closing balance. So the statement of affairs, the items information that we use is that of the one that is under December 1997. That is what we call opening statement of affairs. So fixed assets, we have furniture. Under statement, opening statement of affairs, you don't need any adjustment at all. It is when we get to December 1998, which is the closing balance sheet, that is when we do the adjustment. Just write the information in order to get your capital, because without capital we cannot get our statement of profit. So we have 1,000 here. We have a motor van. Motor van is 1,800. Then current assets. Under current assets, we have cash. Cash is 200. We have stock. We have that is the stock. We have 0, 10, 1, 10, 20, 200. We have debtors. We have debtors of 6,200, and we have bill receivable. Bill receivable of 1,150. So the total is 20,950. Now let's prepare our current liability so as to get our capital at the end of the day. So current liability, we have under it we have a bank overdraft. Bank overdraft, which is 9,000. We have bill payable. If you are following the format of balance sheet, you see that these items belongs to current asset. So we have creditors also, which is 4,560. So we want to get our capital, because in the question we are not given the capital. So what we now do is you less the total asset from the current liability, and at the end of the day you get your capital. You get your capital, which is 6285. So this is what we call opening capital. This is what we call opening capital. So these are you prepare your capital at the end of the day. Then the second step said we must prepare the closing statement of affairs. If you see, let's go back to the step prepare. This we have prepared closing opening statement of affairs. So we also need to prepare closing statement of affairs. This is the closing capital because we need closing capital and opening capital. So this is opening capital. Let's now prepare another closing statement of affairs to get our closing capital. This is opening capital. So we prepare another statement of affairs. Statement of affairs. You know, I told you the other time that you can use two balance sheets, compare two balance sheets in order to get your profit. That is what we are doing here. There are some questions that we will not request that you prepare this kind of account. They will just give you the items you need in order to balance your account. So, but here it is when you use balance sheet to get. I told you the other time that information you have in the first year in the opening balance will be different from that of closing balance. So it's just that when there is trading activities within a year, you see that your balance sheet will change at the end of the day, and that's as a result of what is happening here also. So you can use two